Hello, Prof. Hello, Prof. Hello, Prof. Hello. Prof.
Alpha.
Get ready for your class again.
Don't laugh. The guy never come. Oh. We just hope he will come. And there are more than one people today. One person. There are, I think, 2 or 3 now in that class.
Somebody has come. Oh.
Somebody? Okay.
Yes.
As long as I see anybody, my class will start. Once I see someone, my class starts.
That's fine. You need to start now.
You can spotlight me now, right?
Yes.
Okay.
I'm going.
So there are two students now. Okay, very good. I can see Mr. Kende Olusesan and Madam Aminat Arashi. I'll wait for Madam Amina to sort her audio.
Okay, let me wait.
Okay. Madam Amina is yet to sort her recording audio. So, Prof, can you hear me clearly?
Yes.
Okay.
I'll chat Aminana.
Okay. So I believe now you may want to off your own video so that you will not be appearing.
I've off it.
Okay. So by 7:03 or so, if Amina is not joined the audio, I may have to start. Sorry, Prof. Ayodeji, can you make me co-host so that in case you have problem, the recording will
Sure.
just
Okay.
just make me co-host.
Your second, the last person has joined. Oh. So I think you
Okay,
need to start.
Igwe, fine. I was waiting for her too. So just make me co-host, then I'll start.
You're supposed to be three now. Okay, don't worry. Let me
There's
just...
supposed to even be 4.
Okay, the fourth person is coming now.
Okay. So somebody just make me co-host, then check people who are on in their videos for them to off videos.
You know,
Amina
everybody,
Amina is ready now. Fine. Okay, that's
before
cool.
you go,
Yeah, I'm the host now. Or you made me host too. I took the host away
there's
from
no
you.
way to make you co-host.
Is it co-host you made me, or you make me host? I'm saying host.
Yes, I'm host. There's no place to make you co-host.
Once you right click on me, you will see me as co-host. Okay, you've made me the host now. So don't sign out, so please, especially if it is because the class will be more than 40 minutes, so don't sign out.
Okay.
Please, can you reclaim back the host? Reclaim the host and try to see if you can make me co-host.
Okay.
All right. Good evening, class, and welcome to our taxation class for this evening. My name is Chima. As you can see on the screen, I'm going to be your tax teacher for today. We have 2 lecturers. One of them is Prof. Adesua, while I am the second person, Chima. Today, I'll be teaching this topic. Let me share my screen and show you the topic I'm going to be teaching. I'm going to be talking about introduction to taxation, and we'll be looking at tax administration in Nigeria. So we'll see how we can use the next 2 hours to cover introduction to taxes or taxation and administration of tax in Nigeria. Okay, so what are some of the class rules we have to observe? First of all, students are to be muted for proper coordination of the virtual class. So we are going to ask every student to mute so that nobody will be talking in the class. So for you to be muted on the video and audio here, it means you are quiet, nobody is making any noise. Students are allowed to use the chat button to ask questions. So you can use the button there to ask any question that is not clear to you. But I'm going to amend it this way. Take a jotting pad with you. As the lecture is going on, kindly write in your jotting pad the question you would like to ask. Don't be in a hurry to ask the question on the platform, because that question you may want to ask may be answered in the lecture. And so if the lecturer has answered that question, there may be no need to then post the question. So what you'll be doing, you write the question down, and as it is answered, you tick it off. That's good. Now, in case you have problems, technical difficulties from your end, don't go calling my number, because if you call my number, you'll be disconnecting my internet. What you do is you call this helpline. This helpline here will sort your technical problem for class. Don't go to the chat room and start talking about technical matters. But anyway, if you want to talk about technical matters with the host, you will see the host there, foundation. You can chat privately with the host. That's fine. Students are expected to be cordial and professional when using the chat button to ask questions or express their concerns. So don't go saying insulting words. Don't use words that show you to be unprofessional. Students are advised to listen attentively during lecture rather than writing, because we've provided the materials to you in good time. So, but you can jot down key points that you want to take note of. All questions will be attended to after the lectures. And so this is to give the lecturer a good time to handle this class effectively. So it's not a situation whereby the class is going on, you are raising your hand and say, sir, I have a question, or sir, please take me, sorry to draw you back. No, let's allow the lectures to run smoothly. So you have to listen carefully so that you will make the best use of these 2 hours. Feel free to call or chat your lecturer for questions and clarification outside the normal time of the lecture. Okay, introduction to taxation. Now, what is tax? Why do government charge tax? What is the tax base? What is the history of tax in Nigeria? Who should charge tax? And from whom? These are some of the questions that this topic and the next one will attempt to answer. The government of Nigeria, like other governments in other parts of the world, have a duty to impose tax of any form to its citizen. Any form of tax that they deem appropriate can be imposed on the citizen. So as a citizen, do you pay tax? What type of tax do you pay? Of course, you pay tax. If you are working, you get to pay tax. It's called payee. Yes. If you are a company owner, you pay company income tax. Then, of course, when you go to the supermarket to buy certain things, you pay value-added tax. You're a contractor, you pay withholding tax. If you sell your property, you pay capital gains tax. Some other tax you may not know. You pay radio and TV license in the form of tax. You pay different kind of tax, stamp duty tax. Even when you issue out check and you draw the check, you are paying tax on that check. You stamp your share certificate, your bill of lading, you pay stamp, post office stamp. These are all types of taxes that the government has imposed on citizens as they deem fit. Thus, taxes can be defined as compulsory contributions levied by a sovereign power, in this case in Nigeria, levied by Nigeria, on the incomes, profits, goods, services, or properties of individuals and corporate persons, trusts, and settlements. Now let me explain this statement. It is a compulsory contribution. Compulsory in the sense that you do not wish to pay tax, you are compelled to pay tax. Nobody wants to pay tax, but the government has to collect tax, so they make it compulsory. It's a compulsory contribution because not only you pay the tax, others pay the tax, so it goes to a pool, so it's a contribution. It is levied by a sovereign power. Nigeria is a sovereign power on the income. That is why we have personal income tax, company income tax. These are income of individuals. So you can see individuals here and corporate persons. So income, personal income tax, company income tax, these are incomes. What about profits? You hear your taxable profits. You have this income tax, company income tax, personal income tax can also be charged on profit. So what's the difference between income and profit? Income has to do with you earning some kind of money without doing business. Because when you do business, you earn profits. But now when you have income, you didn't do any kind of business, but you gain certain things by way of doing some work. You are not trading, so to speak, trading. So trading is what gives you profits. So when you go to work and you work for your boss and he pays you salary, your salary is your income. You are not trading. So taxes are imposed on income, on profits, on goods. Example of taxes imposed on goods are value-added tax. And we also have custom duty, excise duty tax, things like that. What about services? The VAT is also there. These are taxes imposed on services. What about properties? We have the capital gains tax. And so these are taxes that government have seen fit to impose on individuals, corporate persons. A corporate person is a company. Trust and settlement. You will get to learn what trust and settlements are. Such taxes, when collected, are used for carrying out government function. You will get to find out some of these government functions as the lesson goes on. What about some of the objectives and purposes of taxation? Now, you see that tax has major objectives that it wants to achieve. That is why it is levying you that compulsory contribution. The first thing is for revenue generation. One of the first primary objective of tax is to raise money so that government can meet its expenditure. So when you hear in the news that government is doing out its budget and they are saying this is what we plan to spend, you'll be asking yourself, where do you think they will get that money? It is from taxes of people. So tax is just one of the ways in which they raise money. That is not the only way, but it is one major way they raise money. And one major reason for raising that money is for generation of revenue. So they spend it on provision of services like defense, giving our army, navy, air force, police. Their salaries come from tax. That's why when you see a policeman doing something bad or a person in government office doing something bad, you say, wow, you are wasting our taxpayers' money. You have things like that. That shows that they are using the tax money to pay for their salaries, to provide defense, law, and order. Health services, you go to government hospitals, they use taxpayers' money to service their salary. Education, schools, universities, government universities, all of these are spent from taxes. What about capital projects? We hear of capital expenditure, government trying to build roads, build bridges, provide hospitals. Capital projects, these are projects that will last for a long time, which is not being done every year. This is a capital project. So they generate this money to run these capital projects. Now, another objective of taxes is wealth distribution or income distribution. How does it work? It means that they are distributing the wealth equally. How do they do that? When government does not take money from taxes from you and now use it to pay you. Or has government ever paid you money from taxes saying that, oh, this is the money we've gotten from the year 2020 or 2019 for taxes. All right, all of you that have BVN, can I send you money? Has government ever done that? No. So how do they distribute, or the proper word is redistribute wealth and income? So when you say redistribute, that means they collect it from all sources and distribute it fairly. How? It is by collecting more money from the rich and collecting just small from the poor. And how did they distribute it? They use it to provide services. So the rich man and the poor man, they go to the same government hospital, they send their children to the same government school, they pay the same school fees, redistribution of income. So the rich pay higher, the poor pay lower. So how do they do that? By progressive taxes. When we get to progressive taxes, you will see how it is being done. Now, this redistribution of income can have two impacts. First of all, it can make the rich to increase their work. People say it will make them to double their hustle. This is because they have tax incentive. And so because they have incentives from this tax that they are paying, so despite the fact that they are paying big tax, if they are giving some incentives, it helps them to double their hustle so that they will get more incentives. On the other hand, it can demotivate them. Let's say, for example, the tax rate increased from company income tax that is 30%, they increase it to 40%. Wow, that is on the high side. And people will start saying, or let's say 50%. So you can imagine somebody who will just sweat from January to December and take half of his profit and give to the government. It doesn't work that way. It will not make anybody want to invest in Nigeria. And so it's going to produce a counter effect if taxes are too high. So mind you, the rich is paying higher, the poor is paying lower. And so if they produce too much tax levy, it's going to demotivate them. Another one is the management of the economy. One of the things that taxes intends to do is to use it as a weapon to plan and develop the country. So when you hear economic financial planner or financial, what's the title of this our, okay, Federal Minister of Finance and Economic, forgotten it, economic development, things like that. So they use our tax money to develop the economy. Now, they use it to provide government with effective and flexible instruments for day-to-day management of the economy. So they use our money to buy certain foreign investments so that the economy can be moving fine. Also, they can use our tax money under the heading management of the economy. They can use it to channel the kind of investors that they want to occur in Nigeria. Let's say, for example, Nigeria wants more of manufacturing industry. Let's say they want most manufacturing industries to be either in the textile industry or in the car manufacturing industry. So they will use our tax money collected from taxpayers to provide enabling environments so that people can come in and do that sector of the economy. They can also make it attractive to them by giving them incentives, giving them holidays, encouraging them to invest in certain sector of the economy. Also, the government can use tax to deregulate or discourage particular activities. Let's say, for example, the government wants to discourage drinking of alcohol, smoking, and betting. They will impose high duty on these items so that when these people who are producing these items pay that duty, they have no other alternative than to include it into their costs, increasing their profit, increasing their sales price. That increase in selling price will demotivate anybody who wants to go into betting or into smoking or into drinking of alcohol, so that they will not indulge in all of this. So anything that the government sees as vices, they will use tax as a tool to discourage them by increasing the tax. So we also see how government can use tax in harmonizing of economic objectives. Now let us see some of the types of tax and tax system. In Nigeria, we are operating on certain types of tax system. So we're going to look at it in two broad ways. The first one is we're going to look at proportional taxes. When we say something is proportional, it means it is a flat percentage. When we say a flat rate, it means either you pay it in numerical amount, say 500 naira, that's a flat rate. If you also say 20%, that is also a flat rate. But in this case, proportional means the percentage. Now, if somebody is told to pay a tax of 10% of his income or 20% of his accessible income, and he has 100,000 naira, that means he's going to pay 20,000 naira. That is 20%. And now when somebody has 1 million, he pays 20%, that's 200,000. So can you see that by making it proportional instead of just flat rates, the rich pay higher, the poor pay lower. So a poor man earning 100,000 is going to pay only 20,000. A rich man earning 1 million is going to pay 200,000. So they collect more from the poor, from the rich man, and the poor man pays less. But all of them could be said to be paying the same proportional tax. Now, the next one is progressive tax. Progressive tax is what we were explaining the other time, where I said the rich also pay higher and the poor pay lower. It can be achieved in progressive tax. This is whereby we use what they call graduated rates. Graduated rates. So we do not use a flat rate now. We are using graduated rates. Let me show you an example of graduated rates. It means that anybody who is earning 300,000 as his salary is a poor man, he is going to pay only 7%. Now, what if he's earning 600,000? They will say, okay, let's graduate it. His first 300,000 will be taxed at 7%. That's fine. The second part of his 300,000, they will charge it at 11%. So you see, the man earning 600,000 is not paying flat rate of 7%, because that will be proportional. He's paying a graduated. So as he graduates from 300 to 600, his tax increases from 7% for the first 300 to 11% for the second 300. Now, what if somebody is earning 1.1 million? Wow, they are going to tax him in 3 levels. Level 1 first 300, 7%. Level 2, the next 300, 11%. The final 500,000 will be charged at 15%. That's fine. If you are earning 3.2 million, you'll be graduated 7, 11, 15, 19, and 21%. Now, assuming you're earning more than 3.2 million, wow. Anything above 3.2 million, that excess will be charged at 24%. So you can see that some people are paying more and some people are paying less. So it is a tax whose objective is the redistribution of income from the well-to-do to the less privileged. Now, look at regressive tax. Under this type of tax, the tax payable decreases as the income increases. So it means that as your income increases, your tax reduces. Now, this type of tax is not practiced in Nigeria because we want to see how we can redistribute all our income from what we collect from the rich and what we collect from the poor, so that we want them to have equity. We don't want the rich to be paying very low and the poor to be paying higher. So regressive tax is not practiced here in Nigeria. Now we have seen these 3 types of taxes: classification, which we call proportional, progressive, and regressive. So don't forget, you might get to see that in exam. Another form of classification is by incidence. Now, what is this incidence all about? Okay, we have the direct tax. What is direct tax? Direct tax is a tax that is felt by the taxpayer itself. The taxpayer feels it directly. Why? Because it is levied on his income, levied on his profits, levied on his property directly. So what are some of these types? Personal income tax. When you have charged personal income tax on your salary feels it. So that's a direct tax. Company income tax. When your company pays tax on its income, it feels it. So that's a direct tax. What about capital gains tax? You sell your house and you do not replace it, you feel that tax. So you pay capital gains tax. Education tax is also paid along with company income tax. Then there's petroleum profit tax for petroleum companies. All these are direct tax. Then we have indirect taxes. Indirect taxes are those taxes that are not felt by the taxpayer who is paying it. He is not the final sufferer of that tax, because these are imposed not on his income, but on commodities. Before these commodities go to the final consumer who ultimately pay those taxes. So that means if I am charged indirect tax, no problem. I will simply add it to the cost of my goods, push it to the final consumer to pay that tax for me. So I'm pushing it, I'm not bearing it directly, so it's an indirect tax. And you who are buying the goods, you're only paying for the goods, you don't know you're paying tax also. Examples include value-added tax. The value-added tax before February 1 was 5%. But as at February 1 this year, 2020, VAT is now 7.5%. There is stamp duty tax. Stamp duty tax are taxes you charge indirectly. These on instruments, not on your income. Then we have excise duties, we have custom duties, these are charged at the ports. So all these are types of taxes with regards to incidence. When you hear taxes by way of incidence, we mean direct tax, indirect tax. Now, look at the tax system. What do we call a tax system? A tax system involves a tripartite aspect. When we say tripartite, it means three parties, namely the policy, the laws, the administration. What is the policy? The policy are the general statements of intentions which guide the thinking and action of all towards the realization of the set goals. So when we say tax policies, these are general statements. These are not laws. These are just general statements to show intentions of the goal to be achieved. Now, look at some of these intentions. Pursuance of a tax law regime with the aim of reducing individual tax burden, widening the tax net, and encouraging savings and investment. So these are tax policies. Example, they want to widen the tax net. So they will create policies. Okay, everybody who is registering a company must provide his BVN. Now that is one policy. And this BVN, which is linked to your account, you have to provide a bank account so that they will also know that this is the company account. So when you default in your tax, they run to your account and freeze it. So they are trying to increase their revenue. So by bringing these policies, widening the tax nets. So anything they do to widen the tax nets, in this case, is also a policy. This is their intention. So this is some of them. Now look at tax laws. Tax laws include these laws that are strictly followed in the administration of tax. We have some of these laws, about 7 here. Personal Income Tax Act, caption P8. Laws of the Federation of Nigeria, 2004. We have the Companies Income Tax Act, cap C21, Laws of the Federation of Nigeria 2004. We have the Petroleum Profit Tax Act. We have the Capital Gains Tax Act, the Value Added Tax, the Education Tax, and the Stamp Duty Act. So all these are laws that the tax people put in place in order to administrate taxes in Nigeria. Now let's look at the tax administration itself. The tax administration involves practical interpretation and application of the tax laws. So you mean that they look at the tax laws and they say, okay, how should we apply this tax law? So it involves application of the tax law. Let's say, for example, one of the tax laws says that income of companies should be taxed at preceding year basis. That would mean that they have to follow it strictly. The law also says that 6 months after the end of your accounting year, you are duty bound to pay tax. And so when you don't pay tax 6 months after the end of your accounting year, you will pay a penalty. So that is how the tax administrators interpret the law. They interpret the tax law, they apply it as at when due. Now, look at some of these laws. The Federal Inland Revenue Service, which is one of the tiers of government that is used to achieve tax purposes, FIROS, they came up on board under the establishment of the Federal Inland Revenue Service Establishment Act. Then we have the State Internal Revenue Service, and we have the Local Government Revenue Committee. So you see that these are your tax administrators. So we have 3 basically in broad sense: the FIROS, which is the federal, the state, which we have 36 in all, and the local government, which are subcommittees. What about some of the basic concepts in taxation? Some of the basic concepts in taxation will assist the reader in having a better understanding of taxes. Now, some of these concepts are tax base. What is a tax base? We hear people say a tax base. This is a measure upon which the assessment or determination of liability is based. It is that portion of a taxpayer's income or property which is expected to suffer tax. So when they say tax base, now let's say you are being charged on preceding year basis, and maybe you run your company from January 1 to December 31st. Your tax base will be any income you earn between January 1, 2019 to December 31st, 2019. Nobody will be taxing you on what you earn in 2020 because that is not your tax base. So it is a measure upon which the tax liability is based on. Now we go to tax yield. Tax yield is the return in form of tax revenue derived from the administration of tax on taxpayer. And so when FROS says that we've made 50, how many billion? 15 point something billion naira. That is the tax yield. This is what they have gained or collected from the operations of tax. When they go collecting tax, that thing that they collect, that they declare that this is what we've gotten from taxpayers, is the tax yield. Now, what is a tax rate? Tax rate is the burden ratio at which a business or a person is taxed. For example, the VAT rate is 5%. Now, note in your exam, your textbook currently uses 5%. But know it that VAT as from 1st February 2020 is 7.5%. Also note too that your exam will determine which VAT to use. So do not just go and say, okay, let me assume that VAT is 7.5% or 5%. There is always a tax table that is given after the questions. Look at it closely. Don't assume you know, because the tax policy have changed a bit. Look at that tax table, look at the appropriate rate and use it. So that's what I will tell you when it comes to taxes and their percentage. Now, what is tax incidence? Tax incidence is an economic term for the diversion of tax burden between buyers and sellers. It does reveal that a person will pay the tax liability. So the incidence of tax, it means who bears the burden of taxes. And I told you that we have two types of tax based on incidence. One of them is a direct tax. So a direct tax, the taxpayer who pays that tax is bearing the tax burden. So the incidence of tax, of personal income tax, company income tax, petroleum profit tax, is on the taxpayer. But when it comes to indirect tax, the incidence of tax does not fall on the taxpayer. It falls entirely on the buyers who buy the goods eventually when the man pays input VAT or he pays custom duties. All these things is pushed to the final taxpayer, and the incidence of tax will now fall on them. So this is also, we look at tax burden. Tax burden is the amount of income or consumption tax that is levied on an individual or business. So when we say the tax burden, it is the amount of tax that you pay. It's your tax burden. So you can use all these words when in class now to show that you really know what you are saying. What is the tax rate of company income tax? Somebody will say 30%. And so if you have 1 million naira, what will be your tax burden? Your tax burden is 30% of it, which is 300,000. I'll be using this kind of languages in the class so that if you like, get confused. So your tax incidence is who bears the burden. The tax burden is the actual tax you are paying. The tax yield is also used by the tax authority that this is what we've gained. The tax base is upon which, how are they measuring what we are being levied? How is the tax burden and tax rate? Where is it being levied? Okay, we have tax impact. Tax impact is the effect of a tax on the production or consumption of products being taxed. For example, if you pay heavy duty tax on tobacco, it will lead to an impact of high prices in tobacco. So you can see that this is the impact. When you say impact, what is the overall effect? So they ask, what is the overall effect of increasing the levy of tobacco? Impact is it will make the cost of tobacco to increase, the selling price will increase, and it might discourage people from buying more. So you can see that this tax impact can be used to control the economy. It can also be used to encourage or discourage certain habits from people. So it is the impact that the government is using to either encourage or discourage. Now let's look at tax shift. Tax shift is also referred to as tax swap. So when you want to swap your SIM card, what do? You bring another SIM card and you transfer everything that is inside there to that other SIM card. So you have changed you have moved everything from one SIM card to the other. So it is a change in taxation that eliminates or reduces one or several taxes and establishes or increases others while keeping the overall revenue the same. So your revenue is the same. You shift your tax from one tax burden to another tax burden. So let's say, for example, you make 20 million naira here in Lagos. Let's assume that Lagos is charging 30% as tax. And maybe in Abuja, they are charging 25% of tax. Now that revenue can be shifted to, so that it can be seen that it is being made in Abuja. Now it is Lagos that is still the head office, or Lagos is still the one generating this revenue, but it is seen that it is being made in Abuja. So they are shifting it. The revenue remains the same, but you have reduced your tax. So this gives rise to what we call tax haven. You get to hear all languages when you get to the professional level. Then we look at tax.
Hello, Prof. Please.
Can you hear me?
Yes. Hello, Prof.
Can you hear me?
This Ayodeji. Can you release host back to me, please?
Okay. Okay. Sorry, class, for there you have it.
All right, thank you.
All right. So class, sorry for the interruption. Now, let's go to the distinction between taxes and levies. Now, what are taxes and what are levies? Now, are all taxes levies and are all levies taxes? This could come up as an objective question. Are all levies taxes? Are all taxes levies? Now, tax is a compulsory contribution imposed by the government, even though the taxpayer may receive nothing identifiable in return for their contribution. And so once you are made to pay something compulsorily and you get nothing in return for what you are paying for. No tangible thing that comes to you personally. What you are paying is a tax. So, when you are levied something, levy is not compulsory. Levy is not compulsory, and also you are getting a specific benefit. So these two criteria must be there. If something is not compulsory and there is no specific benefit for you personally for paying that, then it's a tax. But if one of them is missing, then it's a levy. Let's take, for example, you are paying a court fee because you are trying to go to tax appeal tribunal and they say you pay a fee. Is that a tax or a levy? That is a levy because it's not compulsory that you must pay. You can decide not to go to the tribunal anymore. You don't pay it. What about if the government force you to pay a fine or penalty? Now, you will see that they force you to pay a fine or penalty. Will you say it's a tax or will you call it a levy? It is a levy. Now, you'll be saying that, okay, there is an element of compulsion there, yes. What about the element of benefits? Is it there? You may say no, and you now say this is a tax, but there is a negative benefit. Because you fail to do certain things, maybe you fail to file the tax in the good time, they now impose penalty on you. It is only you that is suffering it. Anybody who does not fall victim will not pay penalty. And so that penalty is a negative benefit to you. So it's a fee, it's not a tax. So these are some of the things there. Look at the principles of taxation. We talk about, the first one is equity. You have people say, he who comes to equity must come with clean hands. So equity affirms that every taxable person should be taxed according to his ability. Thus, the rich should pay more, while the poor pay less. I've told us two ways in which they achieve this is by using proportional tax, whereby you put, say, 20%, and you pay higher. As a rich man, they collect big physical money from you, and the poor man pays lower. They collect small physical money from him, but both of you are paying the same rate. Or they use graduated rates, whereby an income, certain amount of income is being charged a particular percentage until a particular one is achieved. Now, these are ways to ensure equity. Now, in the exam, I just remembered, like as I said before, always look at the tax rates before you answer your question. So they may not tell you that they have adopted the new finance bill. They may not tell you. But from the tax rate that you will see in the exam, that is another way to know. If, for example, they tell you companies' income tax is 30%, just know that they are still looking at the old finance bill. If they say VAT is 5%, that's fine. Then that will mean that if they want you to specifically adopt finance bill on a particular question, they will tell you. But when you look at your tax table, you now start seeing that company income tax, you now see less or below 25 million dash 0 naira, from 25 million to 100 million, 20%, above 100 million, 30%. Now, just know that they have started adopting the new finance bill. So that's one way you will know whether you should be using finance bill in your answer. So that's one of the things you should look at. And also, whether you are using finance bill or not, always quote that you are using the finance bill if you decide to use. a finance bill. Now let's go to the tax principles of tax. We've talked about equity. We talked about certainty. What is certainty? It means that the time of payment of your tax should be clear. The manner of payment should be clear. The amount to be paid should be clear to the taxpayer. So what is the time of payment of personal income tax? If you are a worker that you are paying payee, your time of payment is on or before the 10th day of the next month. The manner is direct deduction from source, and your boss will now pay it through the normal channel. What is the amount? There is a particular amount that is recommended for taxpayers to charge. We've seen the graduated rate. The graduated rate is used for payee. So it should be clear to the taxpayer. So it's not a situation whereby you go to the office and you say, I don't understand how they charge tax from my salary. So you should know and go and look for how you can calculate this tax that is being charged to you, because this tax you are paying should be clear to you. Convenience. What does convenience have to do here? The social and economic standing of the taxpayer must be taken into consideration. Thus, the time of payment should not inconvenience the taxpayer. The government has given a very big amount of time to pay your tax, especially if you are running a company, 6 months, because they know you have to do audit, you have to do some finishing touches and all that. So it's a long time. You pay 6 months. And look at petroleum profit tax. They even tell them to even pay installments. Every month they are paying small money. All right. We also have administrative efficiency. The process of levying and collection must be administratively efficient, transparent, and not cause economic distortion to the taxpayer. So a taxman will not administratively be running after small companies to pursue them like that to go and pay tax, when there are big companies that they will spend their time doing tax audits, pursuing them, because it is efficient for them to do so. For smaller companies, they have the way of doing it efficiently so that they will not be running after you and be spending more money than even your tax. Simplicity. The tax system should be so simple that taxpayers should understand, and it should be productive, it should be flexible. Nature of multiple tax. What is multiple tax? Multiple tax is whereby one taxpayer is being charged tax by different tiers of government. Now get it clear. Multiple tax is whereby you as a taxpayer is being charged tax by different tiers of government. This is different from double tax. Double tax is that same taxpayer, that same income being charged twice. But now here, we are not talking about that income. We are talking about the taxpayer itself. This taxpayer is facing different tiers of government charging them tax. So we have 3 tiers of government, like we said before: the federal government, the state government, and the local government. And so there is a problem whereby the government will be charging you tax, different kind of tax, and you'll be saying, but I've paid this tax to federal government. Why is the state government coming to charge me tax? For example, Lagos State is charging sales tax. This sales tax is on consumption of goods. But you'll be asking yourself, because you're in Lagos, why will I pay Lagos sales tax when I'm paying VAT to federal government? So you see, the problem of multiple tax is glaring here. So what are some of these types of multiple tax? Now look at the ones that are paid by the local government. The local government will, local government, look at the taxes that they pay, that they collect. Entertainment tax. Then you see this road tax. All these Okada riders that when you are entering Okada and they stop and they say your ticket, yes, it's a form of tax. It is legal. They have to pay. Then look at permits for closure of streets. Yes, if you want to close streets, you pay tax for closing that. Even if you want to name a street after your name, you pay tax. Now, refuse collection tax is there, market tax and levies, loading and offloading of taxes. So the list is endless. There are over 100 taxes that the local governments are collecting. Now, what are the taxes collected by the federal government? The federal government will collect VAT. VAT is one thing that the federal government is collecting. The federal government is also collecting taxes on all companies, corporate persons. So these are two main taxes collected by the government, federal government. And if there is any business that is done, maybe a corporate entity sells its property and has to pay a capital gains tax, it pays it to the federal government. And the taxes collected, the taxes of the armed forces and the diplomatic people goes to the federal government. What about states? The states collect personal income tax. The states collect personal income tax. Lest I forget, the federal government also collects petroleum profit tax because these are being driven by petroleum companies. But if an individual decides to do a sole business of petroleum business, then he pays his taxes to the state where he is domiciled. So the state government collects state taxes of persons, and the local government goes down to the local level to collect these taxes. So look at some of the problems caused by multiple taxes. They mount roadblocks. They use unorthodox method to collect these taxes by mounting roadblocks. So you can see that they put roadblocks to force motorists or cadres to stop, such that because they want to collect that tax, they will now have to use those unorthodox method, or they might want to impound your tire or puncture it, or carry one of your jack or your spare tire because you have not paid a certain amount of tax. That's an unorthodox method. Using of revenue agents and consultants. Some people are fraud. They will just come and say, okay, we represent the FROS, or we represent, in Abuja, we call them AMAC, we represent AMAC. Or here in Lagos, they will say they represent LIROS. Or they will just call one local government name. We represent Ikeja local government area. We want to collect this tax. We are consultants. So now the government has decided that if you want to pay tax, there is a tax collection unit. You pay into the bank. So you pay all your taxes in the bank. So no need to go through collection agents to pay your tax. So you can see from federal government solution to multiplicity of tax, you see what I just said. They will give you approved list of banks that you need to pay. Now look at some of the 1999 Constitution and multiplicity of tax. I would advise you to read that. It's a long review. So for the past 1 hour, we've been talking about tax. We've defined tax as any compulsory contribution levied by a sovereign power to its citizen with regards to that affects their profits, income, goods, and services, of which there is no personal benefits accruing to them. And these taxes can be suffered by individuals, corporate persons, units, and trusts. So in our classes, you'll be hearing all those tax terms that we have talked about, those basic concepts of tax. You'll be hearing them often and on. So when you speak that in my class, then that shows that you are a tax student. We look at the various objectives of taxes and their purpose. We saw that the objective is to maximize the wealth of the government, increase revenue generation. We've seen that one of the objectives is to redistribute wealth, then also to manage the economy. The purpose of tax. These are some of the purposes of tax. Now, what are the types of taxes and tax system? We see the direct taxes and the indirect taxes. We've seen under direct taxes, we saw that these are the taxes that the incidence or the burden falls on the one directly suffering the tax. This includes the personal income tax, the company income tax, the petroleum profit tax. Then we have the indirect tax that falls back to the general public who buys the goods and services, value added tax, custom and excise duties. We saw basic concepts in taxation. You should know them: tax base, tax shift, tax impact, tax burden, tax yield. All of these, you need to know them. What about the distinction between taxes and levies? Taxes are compulsory levy. Compulsory levy. So I can see that all taxes are levies. So tax is a compulsory levy, levied on individual, of which there is no personal benefit to him. Why just levies are not compulsory in nature. So when you are paying a levy, for example, you want to pay for C of O, you pay that levy because it's not tax. You are planning to gain certain thing. You want to get C of O, so that is a personal benefit to you. Okay? Now, we saw the incidence of multiple tax. So that brings us to the end of this first topic. We'll move straight to the second one, tax administration in Nigeria. So we have been talking about types of taxes. Let's talk about the administration. The administration of taxes in Nigeria is vested in various tax authorities depending on the type of tax that you are considering. And I told you that there are three types of authorities: the federal, which is the Federal Inland Revenue Service Board; the state, which is the State Board of Internal Revenue; and the Local Government Revenue Committee. The enabling laws that guides them are stated here below. We have the Company Income Tax Act. Like as I said, this imposes tax on companies, income of companies that are into the business of buying and selling. Now, when we say a company, what do we mean? A company is any legal entity that ends with these words: limited or PLC. A company is a legal entity ending with limited or PLC. So if you're a businessman and you say, oh, my name is, okay, let me use my own company's name. Let's say my company's name is Zoom Nigeria Ventures. I am not a company because there is no limited in it, or there is no PLC. So as long as you have limited or PLC, you're a company, then you pay company income tax. Now, petroleum companies that are in the upstream are exempted from companies' income tax. This is because there is a special provision for them called the Petroleum Profit Tax Act. So this concentrates on upstream petroleum profits. Then we have the Education Trust Fund Establishment Act, which imposes education tax on all profits of companies registered in Nigeria. So you can see that some of the reasons why some businessmen decide not to go and register company, but they want to register business name, is because they are not going to be paying education tax, and the company income tax may be high with as compared to personal income tax. Now, another one is personal income tax. This is imposed on incomes of individual and unincorporated souls. By unincorporated, we mean those ones that are not corporate bodies. So you can be a company in the loose word, just in the loose way, you can say a company, 2 or 3 people are a company or partner. So a partnership, fine, is not a company. A partnership pays personal income tax. A business venture pays personal income tax. We have the value-added tax. Value-added tax is imposing taxes on goods and services that are classified as vatable. We'll get to find out when we do VAT. Then we have the Stamp Duties Tax Act and the Capital Gains Tax Act. Now look at the organs of tax administration. We have the Federal Inland Revenue Service. Now, we say that the Revenue Service manages the taxes that for the government, federal government of Nigeria. So they are the taxing authority that the federal government of Nigeria is using to generate wealth. Look at the composition of the people forming the board of the Federal Inland Revenue. So there is an executive chairman. Mr. Nami is the current chairman of the FIRS, and he was appointed by President Muhammadu Buhari. Okay, then we also have 6 members with relative qualification and expertise. These 6 people are to be appointed by the president, and they will represent the 6 geopolitical zones. So there will be a need for these 6 zones to join the Federal Inland Revenue. Then there is a representative of the Attorney General of the Federation. You know, there should be a lawyer who is also involved sorry, in the tax and the Federal Inland Revenue. You know, people normally take the FIRS to courts, and sometimes the FIRS make some decisions that may have legal implications. So there's be a need for a representative of the Attorney General of the Federation. Then we have the Governor of the Central Bank of Nigeria as representative. So you see that the taxes, look at banks, they come under the Central Bank of Nigeria. So there will be a need for the Governor of the Central Bank or his representative to form part of the FIRS. Then we have the representative of the Minister of Finance, not below the rank of a director. So you know the Minister of Finance, they will use the tax to manage the economy. So there should be a representative. Now look at the chairman of the Revenue Mobilization, Allocation and Fiscal Commission or his representative. Like as I said before, they are using it to redistribute wealth. Now, we also have the Group Managing Director of the NNPC. He's talking about the petroleum side. So there should be somebody from NNPC there. Then there's custom. You know, one of the taxes you pay is custom duties. So there should be Comptroller General or his deputy. Then there's also the corporate affairs. You know, when you register your company, you have to get your tax ID. There should be the registrar in Federal Inland Revenue. Then the planning commission, the executive officer should be there because they need to plan, increase the tax net. So they need to know who and who should be in the tax nets. So now the members of the board, apart from the executive chairman, are all part-time members. It's only the board it's only the chairman that is a full-time member. Now everybody, including the board, including the chairman, will hold office for 4 years, just like the president. They hold the office for 4 years, and it is renewable only once. So you can be FRS chairman for 8 years. You can be FRS chairman for 8 years. So if you are not being renewed, if your office is not renewed, then that's it. On such terms and conditions as may be specified on the appointment letter. So sometimes they might say, okay, your term might be 4 years, subject to reaching maybe 65 or 70 years. So maybe you were appointed chairman when you were 72 years. By the time you get to 75 years, that will be 3 years. So they told you that on your 75th birthday, you are going to step down. So you will not say, I've not reached my 4 years now. That is the condition spelled out on your letter. I'm just using it as an example. Look at some of the powers of the board. The board shall provide general policy. I told you before that policies are intentions, are general guidelines. So you see why all these members should be part of the Federal Inland Revenue Service, so that the CBN governor will provide policy guidelines relating to banks. NNPC will provide that for the petroleum company. The custom man is there. The state internal revenue is there. Everybody providing guidelines and policy for the service. Now they said manage and superintend the policies of the service on matters relating to the administration of revenue assessment, collection and accounting system under the law. So they should manage how they will collect this revenue, which bank should they pay VAT, which bank should be collecting personal income tax, which bank will be collecting capital gains tax. So all these are policies they are going to put in place. Now they're going to determine what is the disciplinary measure of the employees of the service. They're also going to recommend remuneration allowances and benefits and pensions of staff and employees in consultation with National Salaries, Income and Wages Commission. And they will also do other things that is necessary for them. Now, they will have a secretary in their midst. So just as they have a chairman, they will also have a secretary. So you should know that. So I'm giving you hints on how you can know the composition of the board. So you know that there must be a chairman. You now look at yourself and say, which kind of taxes do we need to pay? That will determine who should be there. Okay? The states will pay their tax. So you say State Internal Revenue Service will be there. Petroleum company will pay tax. Fine. NNPC. There will be custom duties. Controller General. Banks will pay their tax. Oh, CBN. You are there. The Minister of the Economic Minister or Minister of Finance will use it to plan. Oh, his representative will be there. Then we'll be talking about how do we plan to get these taxes from people. Oh, National Planning Commission should be there. These are some sensible ways you can use to know the board of the Federal Inland Revenue. So you know this, when you go to your park to study all this, it requires a lot of cramming. But if you look at all of this method I've shown you, you can use it to remember who and who form the composition of the board. Just as the board has a chairman, it has a secretary. The secretary is appointed by the board, not by the president, by the board, to do the following duties: to keep notices of meetings of the board. Of course, meetings of the board, they will keep the notice of the meeting, they will keep records and proceedings of the board. So when they have meetings, they have to take minutes. These are the proceedings of the board. Then they have to carry out such duties as the executive chairman or the board may from time to time direct. So they will say, secretary, please do this. The secretary will execute it. So sometimes you see letters being written by the FIROS to be signed by the secretary on behalf of the chairman. So the service shall, look at some of the things that the service, that is the Federal Inland Revenue Service, shall do. They shall assess persons, including companies, enterprises chargeable with tax. Another thing is that they will assess, they will collect, and they will account for these taxes. Then they enforce the payment of these taxes as may be due to the government. So they have to assess, okay, from this year of assessment, how much are you supposed to pay as tax, company income tax? Okay, since you say your income is this, that means you have to pay so and so tax. Fine, they have assessed you. Then they will now say, okay, we want to collect this money, pay it into so and so account. They've collected it. How do they account for it? Okay, they will keep record. So and so person pays this tax. Okay, let's give him a tax certificate. Let's give him a kind of receipt also. They are also trying to show accountability as they collect this money. And they enforce the payment of tax by going and saying, okay, you've not paid your tax, close your shop. Or we're taking you to tribunal. Anything to do so that you pay the tax. Now they said, and now the third one says, collect and recover and pay to the designated account any tax under any provision. So when they collect these taxes, they pay it into the designated account. So, but now you pay directly to that account. So this same provision is still there. Now, in collaborations with relevant ministries and agencies, they review the tax regime and promote the application of tax revenue to stimulate economic activities and development. So they review the tax regime and they say, okay, what can we do so that we will stimulate economic activities in a particular field? Maybe they want more people to be manufacturing cars in Nigeria. So they might decide to say, okay, let's review the tax regime. What do we do? Let's encourage more people to do that by giving them tax holiday. Maybe it was 3 years before, let's increase it to 5 years. 5 years without paying tax, they will want to do that. So they have stimulate economic activities and development to a particular sector. In collaboration with the relevant law enforcement agency, they carry out examination and investigation with a view to enforcing compliance with the provision of the Act. So when you are not paying your tax, you are running away from taxes, that is called tax evasion. They can carry out investigation so that they want to enforce compliance to that law. From time to time, they determine the extent of financial loss and such losses by government arising from tax fraud, evasion, and other losses or revenue forgone arising from tax waivers and other related matter. So they look at these people that are running away from paying us tax. What is the impact? So we are seeing tax impact coming again. What is the impact on our revenue as a result of not widening the tax net, as a result of not going after these small shop owners, as a result of giving tax waivers? Like we hear people say, okay, when they did VAID, and they said, okay, come and declare 6 years profit or so. Come and declare, is it 6 years or 3 years? Then they will not investigate into further income that you've made. So what is the tax impact on this? So they determine how financially it affects them. They adopt measures to identify, trace, freeze, confiscate, or seize proceeds derived from tax fraud or evasion. So these are some of the duties that they do here. Now look at the composition of the technical committee. There is a technical committee. So in order to set up the FROS in its performance of its duties, they need to get committees. So, normally like you watch in the House of Assembly, House of Senate, there is a General House of Assembly, House of Senate. They also give committees duties so that they will run smoothly. So there is a technical committee. The technical committee is composed of the chairman of the FROS as the chairman of the committee. We had all directors and head of departments of the FROS, the legal advisors to FROS, and the secretary of the board. They all form the technical committee. Now look at some of the duties of the technical committee. They consider all tax matters that requires professional and technical expertise and make recommendations to the board. That's why the legal advisor is there, because there may be some things that are technical, legally speaking, and so they consider all of these and make recommendations. Now they advise the board on aspects of the function and powers of the FROS, and they also attend to some other matters of the board. Now look at the State Board of Internal Revenue. Now, for you to remember the State Board of Internal Revenue effectively, you should also know, first of all, know the federal government and the people who are composed of it. Now try to replicate it in the state level. So look at the composition. Just like there is a chairman of the board of directors of FROS, there is chairman in the states. So you are trying to replicate what is in the federal government in the states. Now there is the heads of departments and directors within the revenue service. You can look at it as from the federal level, we have the FROS and we have the state board. Now each state will have all directors and head of departments. So that is taking their place. We have a director from the State Ministry of Finance. That is replacing Minister of Finance in the federal level. We now have the legal advisor. You will now remember Auditor General. You now also 3 other persons nominated by the Commissioner for Finance on personal merit. You will now remember for federal level, we have 6 people in 6 geopolitical zones nominated by the President. Then we also have the Secretary of the Internal State Revenue, who is going to be an ex-official member. You remember the Secretary of the Federal Inland Revenue. So you see, you are mimicking what you have in the federal level. Now, this is a quorum. A quorum is the number of people that can be at a meeting for the meeting to hold and for the decision of that body to be binding on all others. Now, you can see that there are how many people here? 1, 2, 3, 4, 5, 6 people. So, any 5 members of the board of internal revenue, of whom shall be the chairman or director, shall constitute a quorum. Any 5 members of the board of director, of whom 1 shall be the chairman or a director, constitutes a quorum. So that means that if there are 5 people there and the chairman is also among that 5, there is a quorum. But maybe the chairman is not there and there are 5 and there is a director there, then there is a quorum. Now let's say there is no director there and there are 5 or even 6 or even 7. There is no quorum. They have to wait until either a director comes or the chairman comes. All right, look at the function of the State Internal Board of Revenue. I said they are going to mimic what the federal is doing, ensuring effectiveness and optimal collection of all taxes and penalties due to the government under the relevant laws. This is for the laws of the state. Doing all things as may be deemed necessary and expedient for the assessment and collection of tax and shall collect all sums so collected in a manner to be prescribed by the commissioner. So they are going to collect these monies. Making recommendation where appropriate to the JTB on tax policy. So you remember the Federal Inland Revenue Technical Committee make recommendation to the board. So I said they are going to mimic certain things. So you just be looking at what does the federal government do? Can you mimic it in the states? That is how you know the functions of the State Board of Internal Revenue. So let's go down. Other issues relating to delegation of function. The State Board may, by notice in the Gazette or in writing, authorize any person to perform or exercise on behalf of the State Board any function, duty, or power conferred on this board. And they may receive any notice or other documents to be given or delivered to it in consequence of this act or any subsidiary legislation under it. However, the State Board shall not delegate any power conferred on it under the following sections of PITA, that is Personal Income Tax Act, to any person. Sorry. Now look at these powers now. These are the ones that they cannot delegate. Sections 2 of PITA determine the persons on whom to impose tax. They cannot delegate it. They have to do it themselves, the board. They cannot delegate who they will give to assess a non-resident individual who carry on business or trade in Nigeria. To assess and charge a person based on a fair and reasonable percentage of the turnover of his trade or business. This act has been changed. Now, adjudication. Adjudicate a transaction as artificial. This is when it comes to stamp duty. There's an adjudicator. So they will not transfer that responsibility. Now, calls for further return, calls for books, documents, and information. Appoint a person for purposes of collection of tax. There are several of them, plenty of them. So you do well to look at all of these because any of them could come out in your exam and they might just say it's going to be an objective question. Now we have the technical committee of the State Internal Board of the State Internal Revenue Board. So the State Board has a chairman, there's directors within the service, legal advisor, secretary of the state service. So you see it is mimicking the technical committee of the federal inland. So when you know the federal, you know the states. Now look at the functions, similar functions. The technical committee shall have powers to co-opt additional staff from within the state in its discharge of its duties. Consider all matters that require professional and technical expertise and make recommendations to the board. Advise the board on its powers and duties. So just know one, you know all. That's my formula for you. Now, there's what they call JTB, the Joint Tax Board. You've been hearing about JTB. What is JTB? Now, Section 86 of the Personal Income Tax Act and 2004 and 2011 as amended established the JTB Joint Tax Board. Now, the JTB comprises of the chairman of the FIROS, who will also become the chairman of the JTB. So you can see that when Babatunde Fowler was still in office then, he was doing a lot of JTB work coupled with the FIROS work. Now, there is going to be one member from each state being a person experienced in income tax matters, nominated either by name or by office. So when they say by name, it means they will mention your name specifically. Or when they say office, office of the president or a director of finance, if there are different directors or deputy directors. So they have nominated that office, so they will now have to choose from there from time to time by the commissioner that is charged with the responsibility for matters relating to income tax of the state in question. So you see, this is a joint board of federal and state. So federal representative is there. There is representative from each state. Now, there is going to be a secretary who is not a member of the board. So this person who is going to be the secretary is not going to be a member of the FRS. It's not going to be a member of the State Revenue Service. It's going to be appointed by the Federal Civil Service Commission. And of course, there's going to be an advisor of the FIRS who will also join to be the advisor of the JTB. Now, quorum, they need 7 members. If you look at this 1, 2, 3, 4, it's not 4 people here. There are more than 4. In number B here, there are 36 people here. Then plus number A, 37, number C, 38, D, 39. Then when you add that of Abuja, 40. So when there are 40 people, quorum is when there are 7 members or their representatives are there, then there is a quorum. Now look at the function of the JTB. The JTB shall exercise powers or duties conferred on it by the Personal Income Tax and other acts. They are going to also advise the federal government on request in respect of double taxation with any other country. They're also going to advise the federal government on request in respect of rates of capital allowances and other matters having effect throughout Nigeria in respect of any proposed amendment to PITA. So they are going to cut across federal government, cut across the state government. That's why this composition is like that. Promote uniformity in the application of PITA and in the incidence of tax on individuals throughout Nigeria. And so you can see why the board will have all the states represented there. They have to impose its decision on matters of procedure and interpretation of PITA on any state for the purpose of conforming to agreed procedures or interpretation. So we've done 3, we've done the federal, we've done the states, we've done the JTB, which is the joint between federal and states. Let's look at the Local Government Revenue Committee. The Local Government Revenue Committee comes from the Section 90 of the Personal Income Tax Act that local government revenue for each local government of a state should exist. Should be noted that many local governments in Nigeria are against this provision as they claim that it contravenes the provisions of the 1999 Constitution of Nigeria, which vests the local government administration in the State House of Assembly as against this federal law. Just take note of that, might be asked in the exam. Look at the composition of the local government committee. There is a supervisor for finance as the chairman and 3 local government councillors as members and 2 other persons experienced in revenue matters to be nominated by the chairman of the local government on personal merits. What are some of their functions? We have the revenue committee shall be responsible for the assessment and collection of all taxes, rates, fines under its jurisdiction and account for all amounts collected in a manner that is being prescribed by the chairman of the local government. So the revenue committee shall be autonomous of the local government treasury department. So they shall be on their own. They should not be in conjunction with the treasury department and shall be responsible for day-to-day administration of the department, which forms its operational arm. What about the next one, which is the Joint State Revenue Committee? The Joint State Revenue Committee was established in section 92 of PETA for each state. Now, the composition includes the chairman of the state internal revenue as the chairman. So this is Joint State Revenue Committee. So for each state, there is a committee like this. So the chairman of the state internal revenue. So this mimics the JTB. So the JTB is like the federal government and the state coming together. Now this one is each state and the local governments coming together to form JSRC. So there's going to be certain similarities. Now the chairman of each local government revenue committee is there, a representative of the Bureau of Local Government Affairs, not below the rank of a director. There's a representative of the mobilization, revenue mobilization allocation and fiscal commission as an observer. Then that of the state sector commander of the Federal Road Safety Commission, observer, legal advisor of the State Internal Revenue Service. Don't forget that. Then there is going to be a secretary. You see that their functions will be somehow similar to that of the JTB. So I want you to look at those functions and try to see how they harmonize together. All right, let's go to the tax jurisdiction. For incorporated companies, like I said before, incorporated companies, you will have LTD and PLC, and even upstream petroleum companies. The FRS board is the relevant authority. So you are seeing that tax jurisdiction is another tax, some of those tax terms we use. So when you hear, what is your tax jurisdiction? It means where is this tax administrator? Where does it cover? So this belongs to the tax administrator. So when you ask, what is the tax jurisdiction of the federal government? You are thereby saying that where is the territory that the FROS is covering its tax? It is only on incorporated companies. While the State Board of Internal Revenue, their tax jurisdiction is unincorporated entities, individuals, and body of individuals. When they say body of individuals, it can mean partnership, joint ventures. To determine which state board is the relevant authority for a particular taxable person, the question of residence of such a person must be settled first. We're going to treat that in a different chapter or a different topic. So, FRS, there is no problem as to tax jurisdiction. As long as you are a company registered with LTD or PLC, we'll come after you. But if you're an individual, then there is some problem, because let's say Mr. Chima resides in Lagos, also resides in Abuja, and also resides in Port Harcourt. And now you want to ask, where will Mr. Chima pay his tax? So we have to solve the problem of residence first for you to know which tax jurisdiction covers me, Chima, as a taxpayer. Now look at some of the taxes imposed and collected by each tiers of government. The federal government collects about 8 taxes, which we will see. The states collect 11 taxes, and the local government collects 20. So look at the 8 taxes collected by the federal government. 1, 2, 3, 4, 5, 6, 7, 8. All right, we see company income tax, like as I said, withholding tax on companies, residents of the FCT and non-resident individuals. Then petroleum profit tax. Now, withholding tax of FCT is no longer that of the federal government because there is now an FCT IROS. So that goes off. Petroleum profit tax is being collected by federal government. Value added tax, VAT, education tax. So you see, education tax goes along with company income tax collected by the federal government. Then we have the capital gains tax on companies and non-resident individuals. Who are non-resident individuals? These are individuals who do not base in Nigeria, but they are operating in Nigeria. We'll talk about that when we talk about residency. Stamp duties on corporate bodies and personal income tax on members of the Armed Forces of Nigeria, members of the Nigerian Police Force, staff of the Ministry of External Affairs, and non-resident individuals. Now, taxes collected by federal government also includes the police tax fund. I don't know if that tax is being enforced, but that should be included here because it's also going along with company income tax. Okay, taxes and levies to be collected by the state government, the pay as you earn, which is the personal income tax for people who goes to work, withholding tax on individuals, including the FCT. Now, capital gain tax on individuals. So you see, if an individual sells his house and he pays capital gains tax, he pays to the state government. If a company sells his house and he wants to pay capital gains tax, he pays to the federal government. If a company sells to a company, the company still pays to federal government. If a state, an individual sells to an individual state, if an individual sells to a company, what happened? It is still states. If a company sells to individual, what happens? It's still federal. The point you're asking is who sells? Who has the burden of tax? So we are using the tax language. Who bears the burden of tax? If it's an individual, who is covering that jurisdiction? State Revenue Board. Pools, betting, lotteries, gaming, and casinos. Road taxes, business premises, and registration fees for urban areas, such as defined by each state. You see, urban areas, when you want to register your business name, business premises, registration fee. If you come to Lagos here, they will charge you 10,000 naira for business registration or business levy, operational business levy, 10,000 naira for the first time. And each year you are renewing with 5,000 naira. I think it's applicable to some other states here, but I can leave out for Lagos State. Rural areas as defined by each state. So all these are collected by the federal state government. Rural areas, they collect 2,000 naira for registration, and renewal is 1,000 naira. So all these small shops in rural area, it is not, they collect 2,000 naira from them as their business registration fee. So when you cite your business in a particular place, if it's an urban area, just know that this is what you pay. It's rural area, this is the fee you're going to pay. Development levy, yes, it is 100 naira that is taxable on each individual. If you try to pay development levy on the LIROS platform, which is the Lagos State Internal Revenue, you see that it is 100 naira. Naming of streets, registration fees. So you want to name your streets after your name. I've seen people naming their streets. So their name, maybe there's a prominent chief there or a prominent person there. Just pay the fee and register and pay and name the streets there. Right of occupancy fees on land owned by states in urban areas and all that. Now look at levies. As I said before, the states collect 11. So let's count 1, 2, 3, 4, 5, 6, 7, 7 here, 8, 9, 10, 11. Now those collected by the local government are 20. Look at the shop and kiosks, the tenement rates. Yes, tenement rates. When you pay tenement rate to your house, marriage and births and death registration fees. So when somebody gets married, they say go to local government and go and register. In Abuja, you go to AMAC. In Lagos, you go to Ikoyi. These are the two federal registry, but it's still collected by the local government. Birth and death registration fees. Birth and death, when somebody give birth to them, they give birth to people, they collect this birth fee and give you birth certificate. Death fee, when you want to bury someone, you get a death certificate, so you pay the death fee. You know, these are very, very useful. Somebody does not just die and you just go and bury the person. You have to collect death fee, especially if you want to file for certain things. Then there is slaughter slab fees. Then on and off liquor license fee. Then there is street naming registration fee, right of occupancy of fees, markets, taxes, motor park fees, bicycle and truck canoe wheelbarrow. The list is on. Signboard, yes, signboard. You pay signboard at an advertisement fee. So you have your signboard, they will come and count all your signboard and say this is the amount you're going to pay. Illegal parking fee, yes. You see some people who will come and clamp your tire and say you are parking illegally and you will pay fee. Radio and TV license. You'll be wondering, even the small radio that you buy that is Bluetooth radio, you are supposed to pay radio and TV license. Yes. Religious places establishment and permit fees. And I also wonder whether they pay cattle tax payments by cattle farmers only. Supposed to be collected by the local governments. Now look at registration of taxpayers, because there can be no tax until the taxpayers are registered. Just like as you get registered to have this class in Zoom, there can be no class if you don't get registered. So there can be no tax if you don't get registered as a taxpayer. An incorporated company is expected to register with the FIROS, while the state registered with the SBIRO of the states in which they are registered, residents. But what happens is that once you go to CAC and you have your company registered, what happens that straight CAC will send that of LTD and that of PLC to the government, federal government. But you'll be surprised that they will send you your team. JTB will send you your team on your email address. So they will not wait for you to come. They will just register. As soon as you are given your ROC number, they've gone to work, they will provide your team. Now, if you register as a business name, JTB will also give you team, which is now being used by the states. Now, incorporated companies. Within 18 months of incorporation or 6 months after the end of its accounting period, whichever is earlier, Let me illustrate this. I incorporate my company. It was registered on the 1st of January 2018. Now, when will 18 months be? 18 months will be ending of June 2020. I mean 2019. So from January 1 to December 31st is 12 months, 2018. June 30th, 2019. That will be 18 months. Now, assuming that when I registered my company, I didn't start business immediately. Because if I start business immediately, 6 months after the end of my accounting year, if my accounting year ends in December ending, 6 months is going to be June 2019. That's 6 months. But what if I say that my accounting year is going to end in September? According to this new Finance Act, your first year is different from how they do it in the old finance bill. Okay, let's say the business decided to start in June 1. Or let me go back a little. Let's say March 1. And it says, or let's say April 1, and it wants to end this accounting year March every year. So by March 2019, the accounting year has ended. Normally, you're supposed to do 6 months after, which will give you September. But this place says whichever is earlier. So this language always come up when somebody incorporates a company newly. You say 18 months after incorporation or 6 months after the first accounting period, whichever comes first. A newly incorporated company should register with FRS and provide all of these: nature of company's business, year-end adopted, appointed auditor, and all that. Filing of tax return. They have to file tax returns as at when due. And when they file as at when due, they have to attach relevant information, such as all these here when they are filing their tax: director's report, statement of cash flow, profit statement, audited accounts, and all that. Now, there's what they call the VATES. The VATES was established by the federal government that came between June 1, 2017 and lasted only 9 months, ending March 31st, 2018. It was extended to give additional 3 months, which eventually closed in June 30, 2018. The objective is for people to voluntarily come and declare their assets, state their status. Voluntary assets and income declaration scheme. And when they do that, they will not fall into examination. They will not examine their records anymore. They will not pay penalty on interest if they do it within the time frame of the law, and they are going to be waived certain things that the government. The purpose of this VATE is also to bring people into their tax net. Ordinarily, they will not have come, but because of this VATE, this amnesty given to them, they now come into the tax net. So read about VATE and see how it benefits the taxpayer who comes under the VATE. You see waiver of interest, immunity from tax audit, and immunity from prosecution for tax offenses. So, what have we learned so far? We've learned the organs of tax administration. We've seen the federal government, we've seen the state government, we've seen the local government. We've seen the composition of the Joint Tax Board and the composition of the Joint State Board. They are doing the same kind of function. we have seen the taxes that are imposed by the governments, collected by the tiers of governments, from the one collected by the federal government, those collected by the states, and by the local government. So the federal, they collect about 8 taxes, the state about 10 taxes or 11, 11, then the local government about 20. Then we talked about registration of taxpayers and to file returns. We'll be talking about filing returns much later when we are going deep into the topic. Then we talk about the tax amnesty, which includes VATs. VATs is about 9 months that they give you tax amnesty. They will not charge you interest or penalties, and they forgive all your sins because you have now come into the tax nest. They say, okay, go sin no more. But from now on, please be paying tax. So far, so good. We have covered the topic for the day. You can find my phone number here. In case you have any issues on this topic, feel free to call me. These 2 topics we've just discussed are the reading parts of your tax, which has been summarized in 2 hours. So take time and go through this note to save you bulk work you'll be doing in reading your bulky study pack. So after now, you'll be seeing calculations in action. And you can be sure that I'll be giving you lots of tax assignments, calculations that will keep you busy. Today is just the first day, so go ahead and review all these parts. Now let me take some questions that you may ask. If I don't take all your questions, just know that I'm going to handle them later and give you guys feedback. Let me see if there's any question. I can't find any question. Okay. That means that we all understand this topic, and we hope that you are going to do a good job of reviewing it. Until next time, when we have our tax class, which is the tax class is going to be on Friday, on Thursday, and later on Friday. Until next time, from me here is good night and sleep well.